Hi everyone, welcome to my Personal Finances PodCat episode 6, where I'll be interviewing Mr. Wong Kah Meng from Funding Societies. It's an honor to have Kah Meng, who is the CEO of Funding Societies, to be on our show today. Hi Kah Meng, welcome to the show.
Thanks for having me here. Glad to be here.
So, for the benefits of some podcasts who are fairly new to Funding Societies, could you mind to do a brief introduction of the company?
So Funding Societies is the largest P2P financing platform across Southeast Asia. So we started off in Singapore, we moved into Indonesia, and now we launched in Malaysia 2 years ago. So P2P financing is basically an online platform for SMEs to get financing and for investors to be able to invest into credit-worthy SMEs. So I think when we started off in 2015, it was a fairly new business model in the region, but I think the industry has grown very strongly over the past couple of years.
So what is P2P financing, and how is P2P financing as compared to the rest of the world?
Yep. So P2P financing stands for peer-to-peer financing. So we are an online marketplace for SMEs to get access to financing and investors to get investment opportunities into these SMEs. On the SME side, when they are looking for financing to grow their business, one of the areas that they might go to look for financing are typically the banks and other sort of development financial institutions. Where peer-to-peer financing or funding societies come into the picture is when they need quick access to short-term financing to fund the growth of their business. And that's where they can come to funding societies to obtain short-term financing for their needs. Compared to, say, banks or financial institutions, typically they prefer to give larger amounts for longer periods of time, which may not be suitable for all types of use cases for SMEs looking to expand their business, right? So we, as a platform, help to do the due diligence and credit assessment. And once we are comfortable with the risks involved, then we make them available to our investors to invest into these SMEs, right? On the investor side, people can start investing whether through the website or mobile app. They can easily sign up. Once they pass some KYC processes, right, then they are able to sort of view these investment opportunities, understand what the SMEs does, and sort of contribute and support these SMEs to grow their business. Right. Once the SMEs get access to financing, then they make interest and principal repayments back to these investors from the profits that they generate by using these funds. Right. So funding societies help to facilitate this entire transaction.
How is P2P financing in Malaysia as compared to the rest of the world?
So P2P financing in Malaysia started off two years ago when funding societies launched in February 2017. I think Malaysia was the first country in Southeast Asia to regulate P2P financing with very specific guidelines that protect the interests of both SMEs as well as investors who use the platform. Right. This compares to some of the other markets out there, for example, China, whereby the regulations came at a much later stage, more than 10 years after the development of that P2P industry in that place. In Malaysia, we have funded more than 200 million ringgit to more than 500 SMEs to date. I think that, although it's a big number, there's still a long way to go. If you look at the total financing gap for SMEs in Malaysia, which is estimated to be around 80 billion ringgit. Right.
So how is P2P financing evolving over time?
So when peer-to-peer financing first started in 2017, there was a lot of education and awareness that we had to do with both investors as well as SMEs, right? And we also started at a point in time with a very simple product. So we only had one product at a time that give equal installments and repayments to investors, right? Fast forward to 2 years later on, I think there has been a lot more awareness and education and understanding of what peer-to-peer financing is from both SMEs as well as investors. Right. And having said that, there's still a lot of education and awareness that needs to happen outside of the main city areas, so say Klang Valley and Penang and Johor. At the same time, from a company perspective, we have also launched many more investment products for investors. So whilst we started with one, say, term financing investment product for investors, now we have up to 4 different investment products that have different sort of risk-return characteristics and different repayment cycles and whatnot. So I think we have done a great deal in the last 2 years, but there's still a lot more to look forward to.
What is the roadmap for funding societies for the next 5 years?
Yep. Regionally, we are looking to move into new countries. We will be focused on ASEAN, and we'll still be focused on SME financing, so supporting the backbone of countries across Southeast Asia. In Malaysia, we're definitely looking to offer new products for both SMEs as well as investors, and we'll be looking to serve more SMEs and investors that are outside from the city areas, right? Let's say the east coast of Malaysia, East Malaysia. So that's one of the key ambitions of the company. At the same time also, we'll be looking to improve the platform itself, say the website or mobile app, to improve the user experience for both SMEs and investors as well. So I think that's generally the roadmap that we have for the next 5 years.
Why should one invest on Funding Societies platform?
Yeah. So one of the key value proposition for Funding Societies is that it allows investors to invest from as low as 100 ringgit. So let's say you have a total portfolio investment of say 1,000 ringgit that you like to deploy, right? And that means that you can actually invest into 10 different SMEs and hence diversify the risk on a particular SME defaulting. So that's one very core key value proposition. The other value proposition is basically it is very easy to get started. So everything can be done through online. So the whole investment process end to end can be done online. The third reason is basically there is a lot of more asset investment classes that's available on our platform. So we have term finance, we have invoice financing, and we have dealer financing. So and all of them has very different risk return characteristics tailored to the needs of the particular investor. Lastly, we have an auto invest algorithm that helps investors to much more easily invest into notes. So by just specifying the investment criteria, right, what is the range of returns that they like, and what kind of tenor and what kind of industries they like to focus on, the auto invest algorithm would help to do the investing for them, rather than having to make the investors manually themselves. So it really takes away a lot of the burden from manually having to select and investing into every single investment opportunity.
So what is the best approach of investing through Funding Societies?
So the best approach of investing through Funding Societies is through our mobile app. Through the mobile app, you can actually pursue the entire end-to-end investment process from sign up all the way to deposits, investments, as well as withdrawals, right? So in terms of investing itself, there's two ways you can do it. One is a manual investment approach, whereby you make every single investment decision yourself. Alternatively, there is an auto-invest approach as well, whereby you specify the investment parameters that you're comfortable with, and then our auto-invest algorithm would help to make the investment allocations based on those parameters. Right? The benefit of having an auto-investment approach is it allows you to easily and conveniently spread your investments into multiple SMEs, and therefore it will help to mitigate any potential default risk of SMEs. And this is particularly important when you see default risk potentially rising across the whole banking industry. And having this diversification really helps to minimize the impact of any particular default on your overall portfolio returns.
What is the one big audacious habit or goal that you want our audience to take action?
So I would really urge everyone to check out Funding Societies and how P2P financing could be part of their investment portfolio. Right? P2P financing is very new in the market, but I feel that it has a lot of interesting avenues for someone to sort of put their investment and earn returns. Right? This is very different from any other asset classes out there that you might be familiar with, say fixed deposit, unit trust, and the likes. It provides a good diversification against all the other traditional asset classes. So I really urge everyone to check out our website, our mobile app, and our friendly CX team would be more than happy to help you through any other queries that you might have.
Thank you, PodCats, for listening. You can find the show notes and links on our website, mypf.my/PodCat. Don't forget to subscribe and see you next week. Hasta pronto. Kah Meng, who is the CEO of Funding Societies, to be on our show today. Hi, Kah Meng. Welcome to the show.
Also, did I say something?
Yeah, like what you said previously.